Alright everyone, so I'm pretty sure it's obvious what we're going to talk about today, so let's not waste more time and begin. Alright, so breaker blocks slash flip zones, these are basically the same thing, guys, so at least that's from what I've been able to understand. So what are they? They are failed order blocks that signal a significant shift in market momentum and liquidity. They form after a high or higher high or lower low is broken, indicating a potential reversal in market direction. So basically, if a demand order block fails, it turns into a breaker block, and if a supply order block fails, that turns into a breaker block as well. So pretty simple stuff. Now I want you to also keep this in mind. There's somewhat of a very key characteristic here. Usually you'll have a sweep of liquidity here, okay, and then price comes down, takes out this low or higher low, whatever you want to call it. I just simply call it a low. And then once price takes out this low, comes down, retraces real quick into the failed, in this case demand zone, but now turned into supply zone. Same here, price will sweep some liquidity, or maybe it'll even create a new low, come back up, breaks a new high, fails to create another low, and then just simply stays into this failed supply zone, turning it into a demand zone. All right, it's not always gonna look this clean, guys. I will show you some examples, but that is basically the gist of it. All right, don't worry about getting technical with these things either. Just find a zone that failed and then flip that zone around and say, okay, this is now my new supply zone, or this is now my new demand zone. All right, just keep it simple. Don't make it difficult. All right, so let's talk about some key characteristics here. So the key characteristics are they represent areas where institutional traders, large orders have failed to sustain the initial market direction. A bullish order block that fails becomes a bearish breaker block, potentially acting as a resistance or supply zone. So here you can see that we were going in an uptrend. What did price do? Sweep some liquidity, come down, caused a change of character, and turned this demand zone into a supply zone or bearish breaker block. Now here, a bearish order block that fails transforms into a bullish breaker block, potentially serving as a support or a demand zone. Now here, let me zoom in real quick for you guys. You can see we had a lower low, higher high, lower low. What did price do? Break over this high, turns that into a bullish breaker block, right? Price comes down, taps into it, and then goes back up. Now, something I also want to, I guess, let you guys know of is there's a thing called unicorn models. So all that is a fair value gap inside or very close, closely overlapping into a breaker block. So I think more like on this area, we have a breaker block here, and then we have a little bit of a gap. That would be considered more of a unicorn model. If not, I think it would be best that the gap would be somewhere around here, or even here. Like you can see, this sort of overlaps, right? This fair value gap sort of overlaps it, and it just makes it a more higher probability breaker block. That's all, guys. All right, so let's move on. Okay, so now we got to talk about mitigation blocks. So mitigation blocks are honestly very closely related to breaker blocks. So let me just explain real quick. Mitigation blocks, according to ICT and smart money concepts, are reversal patterns that form when price fails to continue in its previous direction at a significant high or low. Again, this can happen with breaker blocks too. So let's just say you're going in an uptrend, right? The only very key distinctions here that you have to keep in mind when identifying mitigation blocks, and this is only important if you just want to label it right. That's literally it. If you don't want to label it correctly, but you just happen to mark it up right, then that's really all that matters. Okay, just mark them right. Don't worry about labeling them. But if you want to get super technical about what they are exactly, then this is how you identify it. So you have a failed break of structure. You'll see price failed to break over the previous high or low, and then comes down, causes another change of character, same way as you would with a breaker block, but price will retrace back into it, turning it into a mitigation block. And then same here, let's say you're going in a downtrend, you have a failed break of structure, price breaks this lower high, causing it a change of character, retraces into the mitigation block, and then price goes back up. All right, it's that simple, that's that easy. There's nothing special about it. Don't make it too complicated. All right, now let's talk about the key characteristics of mitigation blocks. Mitigation blocks represent areas where price or where previous price movements have stalled and reversed, indicating potential future market turns. They are based on the concept of supply and demand dynamics in Forex trading, but this literally applies to any kind of trading. Everything that I'm teaching you applies to any kind of trading. Mitigation blocks differ from breaker blocks in that they form after a failure swing without sweeping a high/low before the market structure shift. But in my opinion, guys, you can still have a sweep of a high as long as the candle doesn't break over it. All right, as long as there's not a close candle of it, you could still consider that a sweep. Some people, even though there's like a candle that closes over a previous high or low, they'll still consider it a sweep if there's a change of character. Okay, so let's say this example, if there was a candle that had closed above this high and then caused a change of character, some people would have said, okay, then this was a sweep. But personally, I prefer wicks, just wicks that sweep over previous highs. But again, that's just me. These blocks can be used to identify potential trend, reversals, and entry points for trades. So real quick, you can see here there was a failed break of structure, right? We were going up, what did price do? Come down, cause a change of character, and price reverses and taps into this mitigation block. And then what does it do? Continue going down, right? And then same thing here. We were initially going down, right? Had a break of structure. But then what do we have here? A failed break of structure. Now you can have two changes of characters. You could have had one here, and you could have marked up a mitigation block here or here. But I only kept this one up so I wouldn't confuse you guys. But yeah, sometimes you can have two mitigation blocks at once. In this case, this one was a more validated one just because it was more in the equilibrium. But you could have marked this one up here as well, and it would have been just fine. But anyways, price came up, caused a change of character, break of structure here, came up, and then retraced into the mitigation block, and then kept going up, right? Pretty simple, guys. Again, you don't have to worry too much about identifying what the exact type of order block it is that you're looking at. If it's a mitigation block, if it's a breaker block, just mark them up. Don't worry about labeling them, right? Just as long as you know how to mark them up and you know how to trade with them, you'll be fine. Alright, my peeps, so we made it to the end of this video. It was clearly not long at all. I tried my best to make it as short as possible, and just not to include any unnecessary information. I know people like to get super in depth, but I just don't think it's that necessary. I really don't think it's that necessary. So either way, guys, just thank you so much for watching the video. Thank you so much for sticking to it. I want to leave you with a little biblical wisdom before I go. This is from Proverbs 22:3, and it says, "A prudent man foreseeth the evil, and hideth himself, but the simple pass on and are punished." Ladies and gentlemen, if you see a bad setup, stay away from it. All right, stay away from it. Move on, especially in life too. If you see anything that you're not supposed to be doing, or if you see something that you say, hey, you know what, this might be a bad idea. If I go here, if I go over there, if I do this or if I do that, I think it's best to restrain yourself and say, I think I'm gonna move on. All right, so with that being said, guys, join the Discord, email me, follow me on IG, Twitter. I know I'm not very active. If I'm being honest, I'm not very active on either one, but that's because I'm trying to move these projects as fast as I can, so that way I can put out the ones I really want to do. All right, but with that being said, guys, leave your comments down below, any questions that you might have, and we'll keep it moving. All right, I'll talk to you guys soon. Peace.